Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. World on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
There we go. Okay, so we got U.S. initial jobless claims 235,000 versus an expected 230. Market not reacting to it too much. I'm actually, in all honesty, a little bit surprised that it come in so close to the expectation. I really thought that it would be, some wild number that would like really throw the markets out of whack and just make things even more interesting. But no, it's not. Now the treasuries are falling down, and I think that might be a reasonable. Oh, you know what? That one, what I just did there, probably doesn't. Yeah, because I had it turned off. Flat. Didn't have my live account turned on. Too slow. Too slow. Okay, yeah, they're gonna move. I think that they seem to be coming back to, okay, actually the economy is actually not as bad as people thought. In fact, maybe the Federal Reserve is actually knows what they're doing. That kind of seems to be what they're suggesting to me here at the moment. Well, that kind of sucks there that I was a little slow on the draw there, because that would have been a good 5 ticks lower. I guess it's not too bad, but it does look like the bonds are going to continue their march lower. The overnight volatility is quite high, by the way, too. So we come over here to our volume profile chart, so you can see, yes, day before yesterday, pretty big move up, and then a big another further move up at the beginning of the session and then just badoosh, and now we're down. And look, we've got all this to go down to the downside. So if this downside continues, it could get quite extreme. And then here in the S&P 500, actually a good rally at the end of the day, but kind of flat. Oil continued to struggle. They're trying to recover $100, but not quite. So those fears are still out there about the economy, larger economy. Gold and silver just absolutely in the dumps because the dollar is so strong. Copper actually maybe seeing a recovery today, so that's good, right? It seems like we are constantly shifting between these different narratives. Here's Bitcoin, still hovering around 20K. And you can see the dollar so strong at 106. So like the market is shifting between these different worries. And for most of the week, we were on the, oh no, we're going to have a recession fear. And now it's kind of turned back into, oh, inflation might be really bad, you know? All right. Anthony, thank you for the donation. Bitcoin is the economic arch. They are weathering this bear market in Bitcoin a lot better than I thought. I mean, there is a chance that Bitcoin could collapse further and it could really, really harm sentiment. But the community has come in and basically tried to backstop each other. I think that kind of creates a dangerous situation for consumers, but they've held it so far. It's impressive. It's just that if we go further, if there is a recession, right? If there is a recession, Bitcoin is so screwed. So screwed. Okay, Yahoo Finance GameStop rises as stock split lures retail investors. I saw that last night and I wondered, okay, is that gonna, spike them up like it has Tesla and all these others? Okay, well, the treasury there, is not doing too bad on the downside, but it looks like they may have exhausted the downside for the moment. And I am going to blow my nose and everything. It seems that demand for 10 years is keeping its yield unusually low compared to the others. Look at how much lower the 10-year is compared to all of these other ones. And here in the 5-year, it's probably the case that this 0135 is more accurate than the 926. That's a pretty wide spread though, right? You are seeing the Japanese yen kind of following us lower. Modify my screens here a little bit. I was messing with them yesterday and they need to be turned in a little bit. That's a little bit better. Yeah, and they come right back to the lows really easily. Liquidity in the in the 10-year treasuries is pretty dismal. There's some 700s down below us. Like it'll take a little bit for them to smash through 21, probably. But if they get below that, there's probably going to be a little slip below. Probably going to be quite a slip down. Hmm. Oh yeah, I totally forgot. The big news today is that Boris Johnson is indeed going to resign. And it just was reminded that because somebody's pointing out that there are bots out there supporting him, which may be Russian bots, I would bet. Seems like something the Russians would do. Could be wrong, but okay, they did print a new low there by about 112 contracts. I think that they're going to have to break a little bit high. You can see that they traded a little bit there, but then they've left the 1,000 behind. So maybe we got to get below 20 half 20. But there does appear to be possibility that some of these prices might slip through really easily. A little bit. I mean, we got two of 1,000s above us. Of course, with 1,000, like the whole issue is it does seem like that the pressure is lower and that it'd be a lot easier for us to slip downwards than it will be to slip upwards. But there's only 1,000 contracts at each price. So um, it wouldn't take much. It would not take all that much to make it go either direction. I think that the sentiment and the fundamentals kind of favored the downside as well. So well, S&P 500 not reacting too much to the news, by the way. So I think that maybe the treasuries wouldn't be reacting too much either if it hadn't have been for their reaction to the economic news that we got yesterday and everything. It does make me wonder now, though, what that non-farms jobs report tomorrow is going to be. I don't think I have any clue which direction it's going to go now. Yeah, see here, the Zero Hedge's read of the story is initial and continuing jobless claims accelerate as layoffs soar. I mean, when you look at the chart, though, it's kind of like, but it's not really very high at all, though. like, it's gonna have to go a lot higher than that, um, for the Federal Reserve to back off on raising rates, right? Well, during all of this, it seems like they've been getting pretty solid selling over here in the 30. The other two, I mean, it's all seems to be auto correlated to the downside, but not super strong yet. But the thing I'm trying to sort out is if there's going to be a change in the spread. Are we going to get further flattening? I think if I was putting on a spread trade, that's the way that I would be going is a flattener. Okay, yeah, that right there, the 5 year, that was definitely flattening right there. So yeah, somebody gonna finally bid the 5 year up. Okay, so there's one right there. I'm tempted to just put one right there at 3-2, and but since I'm already messing with the position in the 10 year, the chances I get filled on that is a little scary to me. I don't think I want to be in that position. So I will just kind of sit and laugh at the complete lack of liquidity in the 5 year treasury. We'll let's roll back here a little. Yesterday sucked. Good trade turned bad. What was your trade, Mr. Bond? I take it wasn't short treasuries. I've always joked. I forget what this guy's name is, but he's a smart guy. He's kind of more of a short seller equity guy, I believe. I can't recall, but he like manages a fund. He's smart. This guy right here. I've always joked that short sellers and journalists are financial detectives, and the regulators and law enforcement are financial archaeologists. They'll tell you with great clarity what happened 10 years after the fact. Okay, so there's that little bit of a drop through after they got through 22, 21.5 or so. Their amount of volume they're trading at each price as they come down. Of course, it's maybe 500 at a clip, but they did trade 1,000 and 2,000 respectively down below here. So I think that speaks well to their ability to continue trending. But it is a very slow trend so far. And that breach of those levels down below that we were kind of watching did not result in an excessive, how do you say, you know, there wasn't like a stop run, real excess or anything like that. So probably the case that we will be more reliant on the 6J for our movement. Which is kind of eyeing further downside, but we'll see. Oh, you took a long. That sounds like it was in the E-mini. You were up 15 points and finished down 20. Oh yeah. This may sound like a new question. You've been trading for 6 years? Really? Oh, no, it has not started. Is it? They haven't switched over yet in London? Yeah, so it is. It will be basically in 45 minutes is when the stock market itself opens. The New York Stock Exchange. So yeah, you still got an hour for the New York Stock Exchange, basically. An hour minus 15 minutes so 45. Yeah, so see how it goes. Like it definitely has the ability to get sucked back up into the hole, but you know, it's showing order flow that could definitely trend a bit. I have a problem when my trade works in my favor. I'm a little quick to add to it and a little slow, I think, to if I'm wrong or has something changed. I think that we all have a problem with that. I have a really big problem with that. I think that that's better than the other problems that you can have. That makes sense. Degenerate Forex. Oh, geez, yeah. Well, but there have been moves in the Forex space, though. I mean, there's definitely opportunity there. Yeah, so I think that the big thing that goes through in my mind now that I think has helped me a lot in that respect, the number of times that I have a trade like really, really forcefully come against me. I mean, it did happen to me this week, but that was kind of a special situation because I tried to get out and then they just didn't let me get out. It was a lack of market orders that screwed me over, but that's the market that we live in right now. I want to think about how many orders do we think are going to come through. So when I look at the 10-year, we've barely even gotten started here today. We're basically cumulative delta net even with where we were at the beginning of the session. But on a day like today, if we continue trending down, I would expect to see this at least 15,000 contracts net. If not, it turn into a real trend day bender and it get into the 50,000s, right? And you can kind of do the same thing with the S&P 500. You just have to think about, okay, what is the reason that I'm getting into the trade? What future orders am I expecting? And how many of them am I expecting, right? So that's the first thing. That really lets you know how far it's going to go, because how far it's going to go in price that doesn't really work, because that changes. Like volatility increases and decreases based on what the liquidity is like and so forth. So think about number of orders. When you get to that number of orders changing cumulative delta, then I'm thinking about getting out. 1. 2 is look for those liquidity holes. Now it's a little bit harder in the S&P 500 because it's an index and there is just a lot of randomness in that thing, right? But in the 10-year, this works incredibly well. If we're coming down, and we may actually be seeing them develop something of a hole here. Like it seems like there's a little bit of a hole here at this 01 half, or sorry, what is it? 21 half. 21 half. You see how like every time they move down, they push a little bit of liquidity out of the way, but then they slide all the way back up here, right? So there is a little bit of a hole they keep sliding into at 21 half. So if I'm getting a really strong trend in a direction, and then I see a really clear hole, an unusually large transaction that goes on there, I might be looking, if it's a really strong trend, I might be looking for it to take another leg beyond that. But then I'm looking to get out, unless I'm really trying to swing it, right? But if I'm going for an individual swing, that's probably it, right? You can scale out. Well, scaling out definitely can help with the mental game. But in the end, it's just kind of skewing your risk reward. So see, they came back to 21 half really easily. And quite a bit traded there again too. Well, not quite a bit, but I mean, they're trading 1,000. It hasn't ticked up. And also, it seems to me that the DVO1 has gotten a little bit smaller than it was yesterday. Because yesterday, a move like that could have been like $20. The only trade ZN. Oh well, so I'm only trading the micros actually. So listen, I mean, trading is hard. I found this hard, and I really like minimizing the risk. Like not having so much stress on me is really quite nice. Trading micros and only risking $10 to $50 at a time, right? So I've been putting trades mostly in the 10-year and a little bit in the 5-year just because the spread is ridiculous. If I didn't have a trade on in the 10-year, I'd probably be trying to bid this up to try and reduce that spread, because it's a little bit ridiculous right now in the 5-year. But why have ZTZB up on the DOM as well? Wouldn't you just want to focus on the ZN? Okay, no. So first of all, I have the 5-year and the 30-year. And if you're going to be trading treasuries, and especially if you're going to be trading order flow with treasuries, you really want to have more than just the 10-year up. For one, you're going to see flows across the board that could matter and are significant. But also, more importantly, you need to keep track of what the spread is doing, right? So right now, this morning, although it's very, very subtle, we're seeing a continuation of the flattener. So the way that I have my DOMs set up, do you see how I have it like, where's my stupid pen? I didn't open the pen up. So if I come over here to a chart, so here's my chart in the 30 year, okay? And this data series down here at the bottom is my knob spread, okay? So with the knob spread, moving down is flattening, okay? Moving down, flatten. Moving up, steepen, okay? So I have my DOMs set up in a way so that it's the same direction. So if it's moving down, it's a flattener, right? And you'll notice here, this one is the 5, this is the 5, and this is the 5. This is the 10, this is the 10. So I have them opposite each other so that these ones will also do the same thing, right? This is flattener. So all I have to do is look at where they are. So on this little move up here to 21.5, I probably need to reset my DOM. I don't know why I don't have it there centered, but you know, this move up was actually pretty flat across the board. But if we have another move down, and you can see when it did it, like look at the lows of the day, right? Flattener. And you need to keep an eye on that, because if you don't, you can really make misreads of order flow, especially if you're trading the ones on the side. I mean, the 10 year is okay with this, but you know, what you might see over here is you might see some buying in the 30 year. You might actually see some aggressive buying, and you might think, oh, the 30 year is reversing. Or something's going on, right? If you were only watching the 30 year, you might think, oh, they're reversing and something's going on. But when you're seeing the whole thing, you might be seeing really aggressive selling over here in the 5 and buying over in the 30. And then you realize, oh, okay, that order flow is the spread. That order flow is somebody putting on a flattener, right? Okay, well, that last little move was a little bit more, and I think I am gonna have to bail here, because that seems to be well outside of my expectations. Well, as long as I keep my loss below $10, I think that's okay. Psychologically, I like big heart trades, but I push it. Right. Well, and see, here's what you do, Mr. Bond. Tell me if this sounds familiar. Is you get into a trade and it's going your way, and you think, oh well, maybe I want to take it off, but oh, it could go further. So you don't do anything. And then it comes back to your price, and you don't do anything. Probably in that last situation, I was okay with it coming back to my price. I actually wouldn't be too opposed to taking a bit of adverse excursion on this, but like, look, they're coming all the way back to the open. That seems a little odd. That does not fit in line with my expectations, so that's why I'm out. Anyways, so it comes back to break even, and you think, well, yeah, but I don't want to get out now because then it just goes up further. Oh, I'm even going to allow a little bit of excursion. And then you just kind of sit there, and you can kind of feel like that anxiety inside you, you know? So like the feeling of anxiety, I don't know. I don't know how you describe feelings, okay? But to me, it's like, did you ever have that situation when you were in junior high and you really liked a girl, but you were afraid to talk to her, so like you never did, and you just crushed over that person, but nothing ever happened? Or maybe even worse, like you did talk to them and you do have like a thing going on, but like you've been friend zoned. So you're constantly thinking about how much you like them, and you're crushing on them, but really you're in the friend zone, and you just kind of sit and ruminate about how you want to be with that person, right? And you you can kind of feel it in right here in the center of your torso, you know? Right? That's anxiety, right? And here's the thing that's really weird about anxiety is that anxiety will release neurotransmitters that help you focus and so forth. Done. Sorry about that. Well, I mean that fell back down pretty hard. It might have just been a shakeout. I did not like that move at all. Oh man, was that just a shakeout or was it something else? I'm not quite sure what to think of that. Oh, look at that! Look at that! If I had kept it, I don't know. If this is the kind of game that they're gonna play, I don't necessarily have to play along, right? If I want to, I want a clean trend. We're going to have non-farms and we got all next week too. So I don't necessarily have to freak out about missing a move. And today, volatility has been high, so we'll probably get big moves. And I don't have to be in here like, oh man, that was like $20, $30 because that's just a sneeze in this market, right? In reality, after prices move to a certain threshold, you shouldn't accept price coming back to your entry. Well, uh, I don't think that you can make a hard rule like that because, again, how far price is going to move is very much dependent on the current market conditions. So you can see here right now, I really don't like to lose more than $10 or $20 on a trade, right? So I gave up at 7 on that one, which is really quite timid for how volatile the treasury market has been, right? Um, but I can remember times when $10 was like, if you got that on the day, that was amazing, right? Or I can remember times where just getting 4 ticks out of a range in the 10-year treasury was difficult, right? So when you kind of anchor your expectations on number of ticks that it moves around, that really sets yourself up to flip flop around, especially when we are in a higher volatility regime like we are right now, right? Like something that very much happened during the pandemic. There was a huge number of people trading price action strategies, in particular PATs. And over there, it was like they were only looking for 1 point, I think, 1 or 2 points. For a long time, we were only looking for 1 or 2 points in ES, right? And then the pandemic came along and volatility just like completely shot through the roof, right? And all of those people that were using that hard stop in Pats got screwed because the whole edge to that strategy was that your stop was much further away than your target, and the stop was further away than what the average volatility would take you. So it was a lot more likely that your target would get hit, right? But the volatility changes, and then that gets screwed. And when you have a strategy that needs to hit 70% win rate to make money, and all of a sudden you're hitting 50%, right? Because the volatility is twice as far as what my stop is. So, but again, that's why I really feel that like change in cumulative delta is like a way better metric to look at those sorts of things from. I mean, I can use range as well to have a bar move up there. How much did we move? 12 ticks. We moved up 12 ticks in the 10-year. when it had taken forever and ever and ever and ever to have ticks down, there's something wrong. We're not seeing the order flow that I would have expected. Anyways, I got distracted. I was talking about anxiety, right? So something that's interesting is that your brain doesn't have the ability to differentiate between different emotions in terms of the impact that it has on neurotransmitters in your brains. So, for instance, one of the problems that you have with depression is you'll get depressed, and if you sit and in your bed all day and crying generates dopamine, and your brain, your body doesn't know the difference. It just knows, okay, I cried, that made me feel better, even though like you're depressed. And so it just wants to keep crying, over and over and over again. And that's how you get into depression, right? And so the same thing can happen with a trade. When you're in a trade and you're getting the dopamine from the anxiety of holding a trade as long as you can, that can result in this kind of feedback loop that keeps you in the trade despite what the actual situation says. Is that why I'm deeply... No. If you're deeply depressed, it's probably because of a chemical imbalance. I mean, if it's truly depression, right? But listen, if I'm not a psychology expert, so I can't give you like medical advice on that sort of a thing. The only advice that I can give is make sure that you're eating, sleeping, and exercising well. And if you're doing those three things and you're still having problems, then you need to go see a doctor. Right. But anyways, so the whole thing here is that it's easy to fall into that trap as a trader. And it's kind of a good thing, because really having a strategy where your win rate is close to 50, probably a little bit below 50, but sometimes you catch really big winners. That's a great setup, right? What we want is a relatively high win rate and relatively large winners compared to losers, right? Like, that's what's so great about informed trading compared to, say, noise trading, is that you can have a high... Usually if you get in like really big winners that you're really letting run, your win rate's going to be like in the 20s and 30s, right? Like when I do a back test and I'm trying to run a risk reward like that, I'm getting a really, really low win rate. But if you're using informed trading, you can get 50% win rate with your winners double or more what your losers are, right? And that's where the advantage is. So you want to be able to run them, right? It's just that staying in a trade does kind of create this anxiety feedback loop. Some people are more prone to it. I think that I'm a little bit more prone to it. So the solution to anxiety, I dated a girl that she had anxiety problems. I don't think that she was always that way, but basically the deal with her was that her husband was her first husband rather had... Oh, is she back? Nope, not quite yet. I'm on baby duty here at the moment. Her husband was in a Scottish band, is I believe is what it was, and he had a really strong friendship with this girl in the band. So he was spending all his time with that girl that he really shouldn't have been, right? Like you know where it's going to go, right? So he eventually he left her, and that left... I tell you what, man, a relationship like that really messes with your body, man. when I got divorced, it was like I don't think I've ever slept as well again. I think that ever since then I haven't quite slept as well. I think I'm doing pretty good these days, although the babies are not helping. I did not sleep well last night. That's another reason for me to be like, well, I don't want to get trapped in that. A big sweep up like that is not in line with the expectations. I was getting the downside that I wanted, but not necessarily the autocorrelation and order flow that I wanted. So maybe it's better to take our licks. All right. It messes with you though, the sleep. Anyways, so I asked her, okay, what do you do about anxiety? Because I had one of my kids. Like I asked her, like we're good friends still. This one girl. It was kind of it's actually I think back on it really fondly because I had to get on this medication called Strattera for ADHD. It's a norepinephrine reuptake inhibitor. And when you're titrating onto it, it basically makes you feel dizzy all the time. It basically makes you feel queasy and dizzy all the time. So think about like feeling dizzy for a month, is basically what it was. I took a week off of work and I had nothing. And there was a girl that I was like super into, but she was having her own problems. So that girl was not around for me when I needed it. And so this other girl, she liked to watch comedies, so she'd just come over and we watch comedies. Now the thing is because she was really anxious, and I wouldn't call myself anxious, but I was definitely anxiously attached. So those two things don't really like attract each other. So we were never really super into each other. But I tell you what, when I needed her, she was there. She was there, and it was a great time. And then she met my friend. We're like, we did a thing, and she met my friend, and she really liked my friend. So she married my friend. So I still talk to them a lot, and I'm really happy that it worked out that way. Yeah, but so I was having problems with one of my kids being anxious, and I asked her about that, and she says, well, the way that you deal with anxiety is you've got to think logical thoughts, right? So one way of going about it is you just have to think about what are the logical reasons why what I'm the way I'm feeling is not reasonable, right? So like if I was still in this trade, I'd have to be saying the same things that I'm saying right now, right? Well, that was a 12 tick upswing. The volume is actually now higher. Like the cumulative delta is now higher than it was at the news. And so we're not really getting the order flow that we expected, right? These are logical thoughts. But you could also take it, you could even go further and you could start doing math in your head, right? Because what that's going to do is that that's going to engage the frontal lobe, emotional regulation centers of your brain that are going to allow you to kick yourself out of that loop, right? Logical thoughts. Engage logical processing. Now, for me, I don't have as much of a problem with that because, I'm on Adderall, and Adderall kind of suppresses your limbic system. So it's a lot easier for me to kick myself out of that. But it's still a problem when you're in a swing trade and I am trading outside of my regular hours. So like the $30 loss that I took on Tuesday. What was it? Yeah. I mean, I knew what to do, and I tried to get out. So I think that one was a little bit more the conditions more than anything. But I know what to do now because I've discovered how to force these market makers in the 5-year, force them to show the real liquidity. Could have done that. They still haven't left yet. I guess they were just packing up and getting ready. This is why I smoke weed for the same problem in bed self-loving. Oh man, don't smoke weed. My understanding on the research with weed is that in moderation it's not so bad, and that it can actually increase creativity, but habitual use of it makes you stupid, man. It makes you stupid. And you know that creativity, the way that it generates that creativity is not necessarily what you want in bonds, right? Because what kind of happens is we'll have a thought. Regular person says, no, that's stupid, right? Person on weed kind of loses that part of the brain, becomes inhibited, right? So I had a bunch of friends that we were in the raving scene, right? So and these were all people that were really into trance, and I had kind of was like one of the few people still into trance and like trying to push it, and we built something, and it was actually really cool. Like the promoters started to bring out more trance acts, and they were able to get more people to come to the show, and it was, you know, like it actually built the scene to where we could have those people out, and it was really great. Then all my friends started taking dabs, and like ever after that, it was like, what the hell is wrong with you people? Why is your decision making so poor all of a sudden? Right? No, you don't necessarily. I wouldn't mess with that stuff. So cycle of doom. Yeah, I have to say, like, you got to be eating, sleeping, exercising right. This is a constant battle I have, because I don't think, well, a constant battle that I have with my family. Okay, so my family is like, okay, we need to watch one more episode of Stranger Things. No, it's 12 o'clock, and it doesn't matter if it's Friday or Saturday. Okay, you got to go to bed at a reasonable. You got to go to bed at least before midnight, right? And preferably getting 7 to 8 hours of sleep. I only got like 6, if that, yesterday, because the babies were just crying their freaking heads off. Oh man, it sucked so bad. Now there's a big bid at 22. That's they may yet fall later today, but at the moment this is doing something else. Do we have news later today? Canadian IV PMI. I may just be done for the day, guys. But I'm just not liking the way this is going today. So I've always, or another one is like, okay, it's 5:30. What are we eating? Oh, I haven't thought about it. Like, what? No, you should have been making the food now. You haven't even decided what we're going to do. But that's her body, frankly, because all of the kids are like that too. They just, like, they do not eat like a regular person, right? But I say eating, sleeping, exercise, those things take priority over everything else. Well, and work. I mean, there's work. But in terms of like your daily schedule, what you're going to do, you do those things first, and then you fit everything else in between, because you're not going to be effective with all of those other things if you're not in good health, right? And when I say like exercise, I really think that you want to be doing something that is like going all out, right? Like at least once a week, you want to be doing something that's going all out. Sprinting, or like when I do weightlifting, right? So when you do weightlifting, that's like every muscle pushing itself as much as it can to lift something. Or if you don't want to do weightlifting because that's very technical, you do or what it is, the kettlebell swings is kind of the more kind of can give you the same sort of full body workout. Now you got to be careful with that as well, because what that does is it affects your nervous system. So when you really exert yourself like that, your nervous system has to recover, and then when it recovers, it will super compensate just like your muscles do, which can make you a little trigger happy. It increases your reflexes, but it also makes you want to get into trades more. So you gotta be careful with it, but you should be doing something that's going all out, and that is the sort of thing that like flushes your system and keeps you in a balanced mental state. I feel like it was in a cycle of doom every day. It was the same, but funnily enough, when the sun's out, I feel how damage. Oh yeah, but that's, you gotta get light. That's another thing. I don't sleep, I don't exercise, I don't eat, I just train. What made you decide to trade, Seth? How did you find out about the industry? Oh man. Well, when I was in school, I wanted to develop video games. That was all I ever wanted to do as a kid. You know what has been really weird? Oh, what broker am I? I'm using NinjaTrader brokerage right now. I'm thinking about switching because I miss rhythmic data. I kind of miss rhythmic data. And you know what else happened was that I wanted to make a robot that would automatically bid, you know, based on what the best bid here is in the 5-year. And when I tried testing it on live data in NinjaTrader, every time that I would put an order out there, it said that it would get filled, even though like no volume had been through. So the way that their sim works in NinjaTrader is kind of like doesn't allow for testing of that, which just kind of rubbed me the wrong way. So I'm kind of like, you know, I would like to go to a different. I should feasibly still be able to use NinjaTrader, but like maybe I go to EdgeClear and put a little bit into their platform. Anyways, I was gonna do video games, and then Zynga came over. You know who Zynga is? They made Farmville, and they wanted interns, right? And it was basically like you had to have done, for you to get hired, you needed to have like 2 serious game projects under your belt and all of this experience, and then they were basically paying minimum wage for interns. I'm like, F that. These people work you to the bone, give you nothing in return, and then they fire you at the end of the project. That's not the industry that I want to work in. Video game industry sucks to work in. So I realized, and I don't want to make games, maybe on my own time, but I don't do it on my own time. I spend all my own time doing trading now. And then the financial crisis happened. When the financial crisis happened, I got, you know, because I was always into politics, I knew that it was a significant thing. And so I said, well, I should start trading now because I need to understand this. And then all of a sudden I realized, oh, hey, I enjoy this more than making games. So that's how I got into it. And then I said, well, if I'm not going to work in the game industry, maybe I should go into the finance industry. And everybody's complaining about how much money they make at Goldman Sachs. So let's go work there. So, and I didn't know that they had a place in Utah. So I applied, and I just happened to be lucky on the timing and everything. And that's how I got my start. And I learned a lot about the industry there. Okay, I need to go check the baby. All right. All right, I'm back. Oh, it looks like my camera has died. Okay, well, we got the baby here. We gotta feed him. Yeah, no, Ninja Trader uses CQG Continuum. Uses CQG Continuum, and I really liked Rhythmics, so. Yeah, gaming industry people get used like slaves. It really is. There are some industries, man, that just really suck to work in, right? Like the ones that stick out to me the most are the airline industry and farming. Man, I finished Clarkson's Farm last night. Guy works his butt off all year. It was a terrible year. I mean, so it was unusual for it to be this bad, but works his butt off all year. Basically makes nothing. He basically he breaks even on his farming. No slurping sounds there. We don't want to be getting the air in. He's also a terrible farmer. Well, the whole sheep thing, I think that there's, hold on, buddy. You never it's hard for me to tell when Clarkson is like serious about something and when he's just doing it for the entertainment value of it. Like the whole, oh gosh, what the hell? Like the whole sheep thing. Did he really think that was a good idea? Or did he just do it for the entertainment value? Like, well, we can't just farm crops all year. That would be a boring show, so we need to get sheep. Food/retail is up there with the worst. I don't know. Like the thing is that these industries that I'm talking about are basically all industries where when you really look at what you're putting into the job, you're actually making less than minimum wage, right? And that is true in the games industry as well to some extent. These people will put in such long hours that when you actually look at the number of hours that they're putting in, they're making minimum wage. Airlines is pretty shitty because they only pay you when the door is closed because of this antiquated law about railroads to do with that. But the end effect of that one is that you might have to be gone all day for your job, but then only get paid for actually like 2 hours of work. Caleb is MVP. It's so funny that so many of you guys have watched that show. I thought it was a great show. Caleb is MVP. Yeah, that was the one that made that. Like, because what everybody has always liked about Top Gear is the way that the guys they can argue, but still have fun with each other and still like each other, and kind of have that play off each other. And Clarkson definitely has that with Caleb. Right. I think that it was like, oh, this Caleb guy isn't afraid to tell me that I'm stupid. And that's why I hired him. Yeah, it was good. But, the whole thing about, well, okay, the government subsidy is going away. So there's probably just going to be a lot less farmers in England in the future was, you could see the whole thing seemed to be actually more a documentary on the sad state of farming in the UK right now, and to kind of alert the public to how difficult farming is. It's actually a culturally significant documentary on a critical issue in our society. All right, hold on, buddy. You're getting a little. We're like that, busting in fights, but still friends. Yeah, I did see that Britain's prime minister has stepped down. I researched a little bit more about that, and it was that over the scandals. It was over the scandals, but a lot of that whole thing started like months ago. Let me finish this baby off here. It's getting to the end. I need to keep an eye on it so he doesn't suck in air. You okay? You're okay. Hold on for a second. Here, bud. Let me put you here. Yeah, I know. Sorry. Stupid thing is like on a hair trigger or something. Come on. There we go. Yeah. Come here. Come to daddy for burps. So the thing that's weird to me about this whole situation with the prime minister, so like the things that they're complaining about happened a long time ago, really, and it was basically like they were having parties that were in violation of the rules, and I mean, there's been scandals like that in the United States, and everybody just forgot about it, right? So the impression that I'm getting from reading between the lines, and I mean, this is kind of, I don't really understand UK politics, so I might be completely off base here, but it kind of sounds to me like this is an excuse to get rid of him, that conservatives never really liked him because he is kind of on the other side of their party. Like, remember the whole thing when Mitt Romney came for the Olympics, and there was a fight between him and Mitt Romney, even though like he's conservative, you think that he would support the conservative candidate, right? I think it's misdirected anger. The true anger should be at the fact that we had lockdowns in the first place. Didn't Zynga get delisted? I don't know. The thing is when they came over, I was like, there is no way I'm working for them. Are you kidding me? They are high on their success because what they're asking of their employees is ridiculous. There we go. That was a good burp. So what happened was my microphone kind of fell and hit him in the head, but he didn't really react to it, so I don't think that it actually got him too bad. No children were hurt. Sorry, the camera's not working. You know what happened was yesterday I took some pictures and I forgot to plug it back in. I really should get a second battery probably, huh? Government intervention. Well, like the whole thing that I got from that Clarkson series is that the amount of control, like, dude, I mean, I don't live in a big city, but you know, I don't live in a rural area either. Okay. And I have lived in a big city here in the United States, but like the episode where uh Caleb goes to the city and they're like, okay, if you're driving a certain kind of car, you have to have a congestion, you have to pay for a congestion tax or whatever the deal is. And like they have to check your make of your car to determine where you're allowed to park and everything. Like it really sounds to me like government regulation and intervention in the UK is just like out of control, man. Because the what was described just sounded insane to me. And all of the regulations on the farming and everything was a little bit like a lot of it made a lot of sense, but at the same time it was like, how do you expect somebody to run a business this way? He didn't quite finish it. The microphone dropped on his head, but he was okay. I think he didn't react to it really, so it must not have actually gotten. Accountability is held at a much higher standard in UK politics. Yeah, well, at least for conservatives, it is. I tell you what, GG, that the way that this works is, okay, you get rid of your prime minister when they did something naughty in UK politics, okay, and then there's going to be some liberal that's going to get in charge. Like who was that crazy liberal that was really holding them back because he was just so extreme? I can't remember his name, but let's say that he got in charge, okay, and he did something naughty. He wouldn't step down. The party wouldn't be telling him to step down, right? And all it takes is one person. All it takes is one person to shake the norm, and it's not going to be like that anymore. It's going to be like it is in the US. You watch, it's coming. You have an ultra low emission zone, which means if you drive a car, any diesel car, you pay a tax every day you drive. Any car made before 2005. Oh, man. Jeez. Okay, so the treasuries are moving a little bit here. This could be a reaction to the S&P 500 opening up. That's what it looks like to me. I'm not too particularly thrilled at going long 2.97 again. But man, like the whole farming thing, this is just like, I always knew that it was a complicated thing, but I didn't realize that people were running these huge farms basically by themselves. I thought that it was like, okay, this is a complicated thing, and there's a lot of small family farms, you know, and they're probably getting, you know, large corporations are coming in and taking over and yada yada yada. But no, actually, the reality is more like it's just one guy on 100 acres. So, and maybe a few farm hands. 70% of the UK population can't afford a down payment for a house in London. Well, that's the same situation in the United States right now. So, and I call 180 for ZN. Well, this downtrend that we saw here, it was much more along the lines of what I was looking for. The timing of it is a little off to me, though. I mean, it must be just be going because the S&P 500 is going up. I am seeing the Japanese yen is falling, but I don't know. When I've already taken one loss, I think that I need to be more careful about taking a second trade. Well, it might have been filled at 2.975. That I kind of feel like I should have been taking it more at like 2.96. Like I think I was a little late because of the baby, which is fine, but like I said, it's probably good for me to relax a little bit today because I did not sleep very well, and that's a recipe where it's like I didn't sleep very well and then I take a bunch of trades. Those are like some of the worst days, so I'm already a little nervous about it. Here's the thing about home payments, right? After the 2008 crisis, central banks around the world have been buying up fixed income assets to keep interest rates as low as possible. Lower interest rates means higher home prices, but it also tends to increase demand for homes, right? It's really has a stimulative effect on home buying. You could see how dramatic that was in after post COVID, where our real estate markets were really in a huge crazy bubble. It was insane. You'd put a house up and there'd be like 50 people asking over, bidding over asking price, and people paying $100,000 over asking price and stuff like that, right? You can't do that for 10 years and expect it to not have an impact on the world, right? And you're seeing it now. What was the impact of that? People can't afford homes because you juiced the housing market too much. And then on top of all of that, home builders haven't been incentivized properly, so we didn't really build new homes. And there's a lot of regulation and NIMBYs preventing development. Lack of space in the places that people want to live, so you have to build more dense housing, and people don't want that. Yeah, it's a problem across the Western world, and it's a direct consequence of our monetary policy. And I'm not saying that like quantitative easing and low interest rates isn't necessary sometime, but some people seem to have it in their heads, especially people on the left. I'm going to make it a political thing, man, because it's a political thing. Okay, the left has gotten it into their heads that the best thing is to just keep interest rates low all the time and have the central, put out as much debt as possible and have your central bank buy it all up, right? And that's worked just fine for them, and we can continue doing that forever. And the issue here is that all of the societal problems that they're complaining about the most, in particular, the cost of housing, are direct consequences of this policy. Well, the 10-year did not touch 18. So now that we're kind of suffering from the consequences of this, and the pandemic really kind of made that strategy fall apart, and we got inflation. Now you got all of the people on the left are like basically gaslighting people. Like I see people out on social media saying stuff about central bank policy and economics and stuff that is just blatant, outright lies. Like the one that really bothers me was when Elizabeth Warren asked Jerome Powell in the Senate hearings if raising interest rates would bring prices back down. And she asked it like towards the end of her time. And she just asked it as like, this is a yes or no question? Will it bring prices back down? And he says no. And then that's the end of it. So now you got these people on social media saying, well, the Federal Reserve doesn't even think that their policy will actually work. That's not true at all. They know their policy will work. But what's wrong here is that Elizabeth Warren misunderstands or is intentionally misconstruing what the goal is. The goal is not to make prices go back down. That would be deflation, and deflation is bad for an economy. Trust me, folks. I remember the deflation in 2008. I hope that we never see something like that again. Okay, you don't want deflation. Instead, you just want inflation that is lower, right? So now that we had such high inflation, let's have inflation that's below 2% for a little while, so that the average comes out to 2%, right? But things should go that the target inflation rate is 2% per year, right? But liberals are working overtime because, like the argument, they're basically saying like Federal Reserve shouldn't raise interest rates, which is just like insane. Okay, like first of all, the goal isn't to have deflation. Okay, those prices that happened. Okay, you're gonna have to live with it. Number two, the real goal here is to prevent a wage price inflation spiral. Okay, so these people out there saying, oh, well, the Federal Reserve shouldn't raise interest rates because it's not actually going to solve the inflation problem or whatever the deal is, are just talking out their ass because they don't realize that, well, it might not necessarily solve a supply chain problem. Although I would argue that the supply chain problem was caused initially because we boosted demand when supply had been harmed, right? You had a global disruption. Under normal circumstances, supply would be disruptive, but yet because supply was disrupted, demand would be disrupted too. But that's not what happened. Supply was disrupted, but then government subsidized demand. So demand stayed high and even went up. We were importing like 20% more stuff, right? And then that caused the supply chain. And once you got a supply chain problem, it's kind of self-reinforcing because the whole supply chain, it then becomes less efficient when it's under stress, right? We can't avoid deflation? Well, you can. You can, but there's consequences for doing it, right? You end up like Japan, right? Like the quantitative easing and everything that we did the last 10 years or so since the 2008 crisis it worked really, really well. There's consequences to it. It shouldn't be something that we do forever. If we did that for another 10 years, I don't think you'd have a country left. It is just too harmful to people. Especially those retirees. You can't be having, when all of the baby boomers are retiring, you can't just destroy their income, right? Well, oh, that was a little an odd little drop there. I'm not liking the liquidity in the treasury. I mean, we're now into 1200s, so the actual numbers are good, but their ability to just like completely fall through for 3 prices, I don't like that. Because I'm still thinking, oh, we could get in at 297 again. But I'm thinking it's probably better to sit on it. Wages cannot and will not go up quickly enough in our lifetime to avoid it. Well, to avoid deflation. Uh, I'm I'm not so sure that deflation, at least for the near future, is a foregone conclusion anymore. Right. The current environment has shifted. Right. There is still population involved here, and that is probably still deflationary, but at least in the United States, that is not as significant of a factor. And so I would anticipate that for the next 5 to 10 years, we're not going back to this deflationary regime unless there's another large global change. Longer term, though, is a problem with deflation as the population ages. A system is broken when prices increased 150 to 200% in less than 2 years. Yeah, I mean they overjuiced the real estate market. They really did. The amount of stuff that the central banks bought at the beginning of the pandemic was alarming. The wealth they have made. Well, it's the interesting thing is going to be when the boomers start dying in more significant numbers, because right now they're like in their 50s, 60s, right? So they're not quite to 70s and 80s where they're all dying off and people are inheriting the money. Supposedly, the millennials should inherit the cash and then they should become the wealthiest generation, right? Gen X and millennials, but that hasn't quite happened yet. And we'll see how that goes. You know, you're not able to recover as much of that as you think. You know, like I think about it again. Like I think that the big question, overarching everything, is really how do we create a society that will continue to improve? That's what it's all about. Is how do we make the world better for our children, for our grandchildren? What do you do now? What things do you teach? What ideas do you develop, and so on and so forth, that can continue to have beneficial impacts to generations 4, 5, 10 generations down the line, right? How do you do that? It's a complicated thing. It's something that I don't think very many people think about. In particular, like again, I think that many people on the left are short-sighted. I feel like there's kind of this overall feeling of just doing what feels good at that moment, without really thinking about the larger picture. And when I think about how you're going to have that impact, I really think that the first starts with your family, because I can come in and I can teach somebody everything about how markets are inefficient, but I can't control what happened to them when they were kids, which is a large part of what you can develop into, especially when you're in junior high and high school, pushing them to, pursue math and things like that, right? So generational wealth is really an important factor. Many people have this idea that generational wealth just shouldn't exist because it's not fair. But I would argue differently. I mean, listen, life's not fair no matter what you do. So I think that trying to bring equity into the equation is just kind of pointless, right? Really what we should be asking ourselves is what is effective? And generational wealth is the most effective way to bring the standard of living for everybody up. Is that you get these kids that were born into wealth and grew up their whole lives learning and understanding about how to manage wealth so that they can go out and create more jobs with it. That's what it becomes. And then the more, like Jeff Bezos, his parents weren't rich, but they were able to invest a few $1,000s, right, into his business, and then he made something bigger out of it, and that generated a lot of jobs. And we want more people doing that. We want more people doing that. So I say that generational wealth is one way to do that. So seeing how the inheritance goes with the millennials is going to be interesting to watch. We'll see if people change their opinions on this sort of a thing, because there is a large group of people out there that think that when you die, that the government should just get everything that you had. I'm sick of this thing, man. Since I'm on one of those kind of moods, I really feel like taking a trade, but I don't think I'm going to. I think that I took that one loser. I didn't like I didn't like how the trade went in general. I don't like how it's been up and down and up and down. And I don't like how I feel. And I don't like how I reacted to that loser either. So I'm going to distract myself by going on a big rant here, okay? The epic, this is one of those epic rants. Look, when things are going well, you get all these grifters, right? You all saw it. We all saw it with the, man, every influencer coming out of the woodwork telling you which meme stock to buy, what cryptocurrency to buy. And there's DeFinance in particular is I think like the worst among the bunch, right? Give me all of your money and then I'm going to invest it and we'll all make money from it, right? And that's the scam. That's the scam, is that basically there's a free lunch. You give the money to somebody else and they're just going to make the money for you and you don't have to do anything, right? Well, you do have to do something. You do have to work. You have to look at the investment and ensure that you're deploying your capital efficiently, right? But the scam is that you can just get it for free, right? Okay, so we all understand that. When we're in a market bubble, there's a lot of grifting, okay? But here's the thing. The same thing happens when things are going poorly. When we're having a decline, like we do now, you get a similar sort of a thing, but it's a different kind of lure, okay? It's not buy these meme stocks and everything. Instead, it's, oh hey, just give us, the government, all of the money and we'll distribute it more equitably, right? But what happens? What ends up happening, right? You give them the money, the politician or the influencer gives it to all of his buddies and blows all of the money on basically nothing, and you get nothing, right? It's the same scam. It's the same effing scam. Give me all of the money and I'll make sure that everybody gets taken care of. It doesn't work that way. Every individual has to put in the work, sure, that their capital, whether it is their intellectual capital, their actual money, their physical labor, is deployed efficiently. We all have a part to play in this game that we play, that is the economy, right? And they're grifting pretty hard because there's a group of people that their economic projections have been proven dead wrong, And now they're trying to gaslight us into convincing us that their insane modern monetary theory theories that I think are largely driven by politics and not sound economics, to try and convince us that they're not actually nonsense, when the evidence is staring us in the face about exactly what happens when you do what they're suggesting they do. Most of the baby boomer inheritance will get wasted buying crypto. It's sad, man. I mean, the whole thing is that people don't really. I don't think that people are really incentivized to go and invest their money in starting businesses. Like there's like drop shipping. There's drop shipping and YouTube channels, and then beyond that, like, why would you start a business? You know what I mean? And even those are kind of getting questionable. Oh, it's like, I feel like it's gonna force me into it, but after that initial decline when we were back up at 28, since then the volume in the 10-year hasn't been very good. It's actually still going higher, so I still don't think that I have the setup or conditions to justify entering into a trade. I don't know how some prop traders trade ES, seems really odd. Well, I think that probably the vast majority of retail day traders in ES are just taking on excessive risk, and they don't have any real edge beyond that. It's like all in in a tight range, try and scale out some in that range, and then try and let your winner run. And then when it does run, you can get 50, 100 point move in the S&P 500, and that makes all your money. You came across it. Apex was on a scam list. I don't think that that's. Listen, we got to be really careful with the term scam. Okay, so a scam is when somebody misrepresents an investment to you, right? They coerce or induce you to enter into an investment on a false premise. They don't give you all of the information. There's critical information that they're not sharing with you, et cetera, et cetera, et cetera. Okay, that's a scam. Okay, so a scam could be, oh, come and buy my day trading course or buy my day trading robot, and you will become a millionaire. Well, nobody can make that kind of a guarantee. So if you're telling them that people are going to make and become millionaires, or you present a bunch of testimonials, right? You got to be careful with testimonials, guys, because as soon as you start talking about how much money somebody made and you're putting that as a testimonial out, that is now like your target for the FEC or federal FTC, Federal Trade Commission. Your target for the Federal Trade Commission, because you're basically representing that all of your customers have that kind of success, right? And then it's a scam. Okay, so is Apex trading a scam? Are they misleading you about something? Is there something in their marketing materials that I don't see anything on their website about how you're going to become rich? Is just you could become a funded trader, which is true. And they have all of the rules up there, and they're pretty clear about how it all works and everything. Oh, my camera has actually died. Yeah, the camera actually died. Should I take it down? Wait, we could just move over to this one right here. We could move over to this look if that's better. Oh, and I don't have my ES chart up, but that's fine. Right. Yeah, I know. I really should buy another battery for my camera, but last time I was looking at it, I was like, I think I can spend that money better elsewhere. Look at them. They're really like making me like, it's gonna go lower. I have to say though, volume not really confirming it. Correlated assets like the 6J not really confirming it. S&P 500 kind of moving back down. Yeah, I think the only reason I'm feeling like, oh, I want to get in here so bad is just because it was trending yesterday in the downward direction and they're at the bottom of the range right now. Nothing else that I'm looking at actually suggests that it's going to happen. So that doesn't mean that it's not going to happen. But I do kind of think it just means that I probably shouldn't take a trade. Here's some 18. I don't know if you can count it now. That was a pretty big pullback before we got the 18. You know, if we get it this time. Like so look, they're going offer, but they haven't traded 18 half yet. Right? Okay, there they traded it. I think you probably got a pretty good chance that they're going to trade 18, but I'm just saying, even though it's moving down, the order flow is not really behaving like a trending order flow at the moment. Now, the whole thing is that the current data doesn't necessarily predict the future data. It's just that the things that we did have that kind of predicted future data didn't do what that future data would suggest. So now is it just going to do it like an hour and a half later? Yeah, we'll see. We'll see. Yep, there's 18, but only 24 contracts. Let's say that, because if you had your order there, like, you would be at the back of the line. So let's say that there has to be 1,500 trade 18 before we see that you got the winner on that one. By the way, I should also note that since in the last hour or so, oil has been able to recover $100 and is now back above 103. Yeah. Okay. So now it's only 31 contracts at 18 so far, even though there's a big offer placed on it. So now they're kind of having to play games to even get their fills at 18. I wish the FTC would go after all the smaller YouTube gurus too, instead of waiting until they get so big, like Raging Bull. Well, I do too, but there's a reason why they do what they do, right? Like, the reality is that those agencies don't have enough resources to go after every YouTuber out there, because you're literally talking about thousands and thousands of channels and stuff doing this sort of a thing. So there's just no way to even begin trying to police that, for starters. And then the other big problem is that the most they can do is slap a fine on them. Maybe it destroys their business, but you know what? I'm gonna bet you that the Raging Bull guys, they get the slap, they take the big fine or whatever, and then they turn around and they start marketing something else, and they just are a lot more careful about staying within the FTC's rules, and they probably still make a killing off of it, is what I'm going to bet. So in other words, enforcement is not a big enough disincentive to prevent people from doing it. Even if there was like guaranteed that you would be sued or whatever the deal is, most of those gurus would probably still do it. So, I mean, like, there's very clear incentive to do that sort of thing. Right? Like, why wouldn't you do it other than personal pride, right? Like, that's for me. Like again, what I was saying yesterday, right? If I'm going to offer product, I want to ensure that my audience, as net, is getting more out of it than what they put into it, right? So if I look at my indicator package, right, it's $100 a person. And I'm not saying that each individual person is going to make $100 off of that indicator package, but I believe that when you took the aggregate of all of the traders together, that they'd make $100 per person, and that doesn't mean that they won't lose it later. I mean, that's the hard thing about it, is that you might have edge that's generated from a certain thing, generates a certain amount, but then you lose it for other reasons or whatever. But I do think that you're getting more value out of it than you put in. In fact, I think you're getting a lot more value out of it than you put in, because the reality is that I could, like my indicator package in particular, I could probably charge a much higher price for. Like the market rates for going for these sorts of things, I could probably charge upwards of 500 to 1,000, right? So to put it out for 100 is like a really crazy deal. But yeah, I guess part of that is because it's not primarily about making money from it, right? I want to provide something for people to kind of get them on par with what they need to be competitive. And I want to be able to bankroll the development efforts, but I'm not looking to make a killing, right? Just enough that, we can put more into the development. And it's been going pretty well. It's been growing, in fact. Like, I hardly say anything about my indicator package, but more and more people see more and more people asking about it and buying it and stuff, which is good. Okay, well, they only traded 31 at 18. That's not a good sign for the downside, right? So like I said, something I have learned, my experience here is that the empirical behavior of markets is you'll form a liquidity hole and you'll rotate around that price. That often becomes the point of control, or this volume distribution. So that's what you're getting right now at 21 probably. That makes it a little bit difficult to get above 22 and below 20, right? And even if they do get below those, there's a chance that they get sucked back to it, right? People think, oh, I want to see it moving down, and then there's this massive iceberg, and then it flips. Well, like, if it's like really truly a massive iceberg, that can result in a reversal, okay? But generally, that's not what happens. Generally, if there's a large transaction, it will rotate around that price, right? The thing that I found is much more indicative of a reversal is when you get a trend down, it seems in line, like right now, based on everything that we know, we would be favoring the downside in the treasuries, right? So to come down, break down, and only trade 31 at that new low and be super tepid at the 18.5 is not a good sign for further downside, is it? Now, again, what matters is the future orders. So if somebody all of a sudden comes out and decides that they need to sell 50,000 contracts, of course it's going to go lower. But for the time being, we don't have a lot of evidence supporting that kind of a move, do we? Right? Otherwise, why'd they only trade 31? At least there would be a lot less ads. How do I turn $100 into $50,000 in 1 week? Or videos of them in rented Lambos or private jet talking about how day trading can change. Well, I don't think that it's the government, man. Like the government, the government, I really don't think can police this effectively. I think it's YouTube. And like I made a video about this too, right? The way that the YouTube system works encourages what sensationalism, right? The way that YouTube is set up currently encourages sensationalism, and it encourages entrepreneurial sensationalism. Try and sell people on some entrepreneurial venture and tell them, they're going to make so much money. Like the things that made Mr. Beast popular were all of these things of like, oh, I gave this money to a homeless guy. I did this money, I spent all of this money on this thing and that, right? It's the title, it's sensational. Oh, he's throwing so much money at it, right? That's what gets people to click. And so the algorithm prioritizes how people react to the thumbnails so much is a really big factor in that. But it's also that YouTube just like does not enforce its community standards very evenly. It really should be that you should not be able to make a claim about how much a person will or won't make in a venture of risk. That should be like automatic strike against your channel. If YouTube enforced that, then it would be different, right? But the reality is that YouTube doesn't even care if somebody is running an outright scam. Like you can come in on YouTube, you can be running an outright scam, promising people, that they're going to make millions if they just give you $10,000 or whatever the deal is. Have terrible business practices. I've seen people where like you'll buy their product, and then if you don't like their videos enough and leave comments and whatever, they revoke your access. So you bought it, and then they revoked your access because you didn't continue to, comment on their YouTube videos, for instance, right? And then they can go around and they can harass other channels. And YouTube doesn't do jack squat about it at all. The YouTube just literally doesn't care. What has happened is they outsourced that to another country, and they say, well, yeah, maybe people are doing improper things on our platform, but as long as we're making money, it doesn't matter. That's basically what they did. And then they washed their hands of it and they gave it to another country. They outsourced it to another company in India. Making too much ad revenue to count. Yeah, it is 100. It's 100% YouTube, man. It's 100% YouTube. They have complete power to stop it. Okay, so now they trade at 18, 17.51. That's not bad. There is a good offer there at 18.5 too, so maybe we will get some continuation. I'd still say, well, the flow in the 30 year is pretty good. The flow in the 30 year is pretty good. We are seeing a hint of flattening again. We'll see. If I had taken my trade, I'd only be, if I had held my trade that whole time, would have gone down as much as $20, and I'd only be getting 10 out of it right now. So what does that tell you? Is it really a worthwhile trade? Especially if we got like 45 minutes left. How much more are we going to get in 45 minutes? Okay, if we get like another 30 ticks before 9 o'clock my time, then I'm going to feel bad. Okay. Then it's going to be, you probably should have held it. But let's see what happens. Because you never know. Man, I wish we hadn't have gotten onto that topic now, because now I'm just gonna ruminate about how bitter I am at YouTube for the way that they do things right now. Because it really is like they just let we live in the platinum age of fraud, and I think that YouTube is one of the largest factors in that. They don't do anything about it. They don't enforce their community standards very well. People get away with harassment all the time. And then on top of all of that, they've got this copyright strikes issue where you can put up a completely original piece of work on YouTube and somebody else can claim that it's theirs and get the channel banned. And there's absolutely zero recourse for the creator, right? Like YouTube is probably the best place to make content, but there are some real problems with this platform, man. News combined with the open makes it such that the order will not price far off the initial opening price. Yeah, those ads show up on my videos too, I know. I never made my, the one video that I really wanted to make back in 2020 was the one making fun of all of the gurus. I think that kind of like the timing for that video to be relevant is kind of past. Well, see, what I'm seeing right now in the order flow, I think suggests that they have the ability to move lower, but it's just not as strong of a trend. It's just not as strong of a trend. It took quite a bit to coerce them into selling at 18, and now it's taking a lot to get them to sell into 17.5. We are getting selling in the 30-year though, so well, you will see, listen, the most active times for the stock market are the open and the close. The close because of the closing auction, and the open because that's the first opportunity that people have to trade off of whatever it is that they learned since the market last closed. And the increase in number of orders at the beginning essentially makes it as such that you're really likely to move there at the beginning, right? You ever heard that statistic that like when you make when you break the overnight high or overnight low, tends to happen within the first hour of trading is very often that high for the day? Well, I mean that's a lot less true now because we've had so many trend days in the equity indexes, but generally speaking, why does that happen? Because the most orders are at the beginning, the first hour of trade. That simple. The news was negative? No, I wouldn't say that. We had the jobless claims was mostly in line as a slight uptick in the number of jobless claims, but probably not enough to really affect the Federal Reserve's view of the employment situation and the need to tighten things. So I think that you had a little bit of selling in the Treasury because that's kind of been the trend. A continuation of yesterday's trade, because what you got there in that jobless claims, I think, kind of reinforces what we saw yesterday, and so I think that that's why I'm favoring downside in the Treasury. But you can see it's not a super strong downtrend in Treasuries yet. In fact, I'm kind of starting to think that what's going on is the pressure is strongly to the downside, but that the major players aren't actually playing. The major players are all holding their money until the non-farms number tomorrow, probably. Which news? Well, so on Friday you got non-farms. Okay, that's always a blockbuster number. What the market's going to do based off of it is anybody's guess at this point. Usually we get some really good analysis the day before that will hopefully give me a better view of what it's going to be. So if I come over here, non-farms employment change, we are, the estimate is 275K versus a previous reading of 390K. So that would be a continuation of the decline that we've had in 2022, but not a dramatic one. The inflation, CPI, consumer price inflation, that is next Tuesday, I believe. That one's going to be really big. Do we get estimates for that yet? Let's see. Oh, it's not Tuesday, it's Wednesday. I don't have a forecast yet. The previous was core CPI month over month was spot 6. So if we come over, I don't know what the estimates are going to be, but I think if that number came out like spot 8, yeah, this market will throw an absolute fit. Noticing here Bitcoin's getting a bit of a pop here along with the equity markets. I want to see it. We'll see, because it could come out, could be 0.5. I actually think I wouldn't be surprised if the consensus expectation comes out to be 0.5 and we hit that right on. And then, well, that'll be difficult because it will suggest that peak inflation has already passed us, right? That's kind of the Fed is right scenario, right? But the issue with these consumer price inflation numbers is that they have the potential to move the markets dramatically either way, and it's kind of difficult to know which way it's going to be based on what the news is too. Like, this is the whole thing. Is remember the big picture where it's like you can't treat the market like a black box because it has a state. It remembers what was previously placed into it. It has a memory. The market has a memory. It knows what you previously put into it. Okay. And so then there's all of these players out here that are reading the output and they're using that to make decisions. And then they all send orders. Right? Okay. So this would be like an agent-based network model. Okay. There's all of these different agents, hedge funds, retail traders, etc., right? What are they going to do? And what's going to happen is you're going to get a certain market price, and that's going to go and affect these guys over here, and that's going to affect what these guys are doing. But if the market price is not informationally efficient, right? These people are going to get bad signals, and these people are going to get bad signals. And then you're going to get all of this data like, okay, like here are what the new orders are, and here are what the employment situation is. The actual true state of the market is we can't decipher. and we would get whipped around a lot. It's difficult to determine which way it's going to resolve after all of the whipsawing. We're in a difficult situation. This is a difficult time to trade. You said that the treasuries have less risk than the indexes. Is it because of the tick value or the daily movement? Both, really. So if you're trading the 10-year, okay, it might not necessarily be true right now because volatility is really high. But like, okay, your ability to make or lose $100, that's like 8 ticks in the 10-year, which is a large swing right now. Versus the S&P 500, if you're trading full ES, that's just like two points, right? It's nothing. It's nothing in ES. So then you can go into micros. Okay, so now you needed to go 20 points to make her lose $100. But guess what? We've gone from 38.64 to 38.92. So you've done more than that already, right? But then you go into micros, okay? Like you go into micros, okay? Average swing in the micro, maybe $10, right? In ES, it's pretty small, but in MES, rather, you can still make her lose $100, right? 20-point move would be $100, right? To make her lose $100 in the 10-year treasury, both because of the tick size and how much movement the treasuries has, that's like a third standard deviation range day to make her lose $100. We've been getting a lot of them lately, okay, but highly unusual. Okay, so yeah, the amount of risk that you as a retail trader have to put up to trade the treasuries is considerably less than any other instrument, okay? If you come in and you put one contract on and you hold it until the end of the day, on average, the amount that you would make or lose in the treasury compared to any other instrument is significantly less. You're talking about maybe $20, $30 a day, even in a really volatile environment like right now. Versus, $300 over in ES. It's like orders of magnitude less risk. And that's why I like about it. Because look, trading is hard, learning it is hard. And I think that you should try and get as much out of your money as possible, right? I'm going to make a video. I've been working on, I said I'm going to provide more information about bonds. I think I've got I think I've got it figured out, the strategy that I want to go for how I want to do these videos. And I think it's going to be really good for the channel. I think that these videos could be really good. And we'll talk about some of the reasons why you should trade treasuries, right? Because there's lots. The amount of risk that you have to put on is very minimal. That's one really good benefit, okay? Another really big benefit is that treasuries can have really strong trends, but also has really good mean reversion behavior too, really consistent mean reversion. So your ability to find an edge in there is a lot better in the treasury than it is other instruments, I think, right? The next thing is that you learn a lot from treasuries because the treasuries kind of requires a general overall economic knowledge. So you learn about the market as a whole, and that information is then transferable to any other instrument that you trade. So it's very valuable information that you get from the treasuries. And I need to take a drink here. And then on top of all of that, the treasuries are really great to trade in risk-off environments. You can come in and you can just buy the treasury and hold it, and you get the easiest money-making trends you've ever seen in your life when treasuries go risk-off. And that's like the one place you can go and you'll be able to make consistent money when everything else is falling apart. And even if you try and go short in the S&P 500, you just get stopped out of your positions, right? But you come over here into the treasuries, you just go long. It's an easy trade, right? So it's a really powerful weapon to have during downturns, right? So those are a couple of the reasons, and we're going to talk about it in a video. Because I think that we have a really tremendous opportunity here in the micro treasury futures, and the majority of retail traders are sleeping on it. We're sleeping on it. There's this huge opportunity in micros. They say, oh, well, you know, the commissions is $1. So, you know, I lose 1 tick. Dude, it doesn't effing matter. It's trivial. That's not what's holding you back, right? What's holding you back is your ability to derive a real actionable edge that allows you to predict better than the market what is going to happen and make money from that. And your opportunity to do that in the 10-year treasury is much higher than it is in other instruments. And unless you have really specialized knowledge in that particular field, like you know a lot about the farming industry or you know a lot about the oil industry, right? So if you just want to trade and you're starting from scratch, I'm telling you, I truly, honestly believe, and of course I can't prove this, so this is just an opinion, but I do believe that treasuries is your best opportunity, and micro treasuries in particular. And retail traders sleep on it. They sleep on it. We're going to fix that. Because look at these spreads. They're ridiculous. There's some room for retail traders to come in and make some money market making these, man. And it's going to provide a benefit to the market. Let's do it. I'll make that video. Not this week, though. Next week. I got a video I got to record. Probably going to do it tomorrow night. No Lambo. Well, listen, if you want Lambos, trading's probably not the... If you want a Lambo, start a YouTube channel. I mean, I probably shouldn't be saying that, right? But like, you could try and compete with me. I'm not that good at YouTube. Actually, you know what's? I was thinking about this the other day because there's definitely YouTube channels in our space that are more popular than me. And there's been people that have started long after I started and have become significantly more popular than me. But nobody in the future space really makes talking head videos. You get what I mean by talking head videos? Like a video where it's me from the torso up talking about a specific subject in a pre-planned video. They don't do, like Futures Trader with 71, he has a really great channel, right? He does this morning thing and he does webinars, which is a little bit different. But like a talking head video that's edited and formatted specifically for YouTube audience, I'm the only one that does that. And you know what? I think I'm got pretty good at it too. Yeah, Matt does have some videos like that. That's actually is true. He has a couple that actually I think he's a lot like me in that respect, in that he started much more about the stream and kind of ended up making videos because that's just what you do on YouTube, right? But I haven't seen a real video like that in a while. I haven't checked him in a while. Matt is the best example of where somebody leapfrogged me in popularity for sure, right? Like, I think he's the 50,000 subscribers now, isn't he? Mm-mm-mm. 85,000. Wow, sir. Like, it seems like it was only a few months ago he was at 10K. I tell you what, because like, here's the thing, is because I trade treasuries and the majority of retail traders want to focus on ES, which I really don't think is what you should do. You know what? When I talked to the traders at the big bank, I think it's kind of funny how sometimes I will identify which big bank that is, and sometimes I won't, depending on the context. And they were like, "Oh, okay, so like, what do you like to trade in?" And I was like, "Oh yeah, yes." They laughed, you know. They thought it was funny because really, it's like trade or crack, right? Like, it's always doing something. It's always interesting. Okay, but what is your actual ability to get a predictive signal over there in ES? Right? Most of what people are doing, they're taking on risk, right? They don't actually know what it's going to do. They don't actually have a really predictive signal. Like I put it this way: you have a stop and a target that are equal to each other and are both larger than the average true range, and you get a win rate higher than 50%. Right? Try and do it. You get me a back-tested algorithm that does that. I think you'll find it's incredibly difficult to even get 52% win rate on something like that. I found some signals that did 52%. Okay, but that's not enough, right? That's not enough to live on. But I digress. Part of it was that he was trading yes. So when he came along, we did see some changes. Like, we used to be like 50, and then we went to 30. Now during the summer, it's a lot lighter. And it's been a lot lighter this week because, holiday weekend. They had the deal with the kid. It kind of came in and said, "Oh, okay, I don't think I'm actually going to take another trade today." So some people are like, "Well, then tune out. That's okay." By today's standard, he is a trader. Yeah, I don't know. He seems like a really good guy. The thing that I continually run into is that I run into a lot of retail traders that are watching his channel and don't realize that it's largely about taking on excess risk, and that what profits he does generate are largely a factor of the amount of risk that he takes on. But most people watch it and think, it's because he has this price action strategy that works. And from what I've seen, there's not actually edge to price action the way that he does it. It's the risk, and I think it's important that people understand that. Because that's why so many retail traders follow these strategies that just don't work. Because they saw somebody else make money from it, and they don't realize that the person that made money from it, they didn't make money from it because their pattern actually predicts the future or something like that. They made money from it because the amount of risk that they were taking on compared to the amount of money that they actually made is really excessive. Just say hi to stupid people with a fake smile and they will watch you. Well, look, I'm not the all, there are some things about my personality that can be really grating to certain people, right? Especially if you are an agreeable person. You don't want to come here on this YouTube and argue with Seth about economics all day, right? Or listen to politics, or listen to, a debate on central bank policy. Like, that's just not what the majority of people want to do, right? Ugh. There was somebody, was it ICT? I can't remember if it was him or somebody else. There was this one person that came in that was watching our stream for a week or two. And they were a really big fan of this other YouTube channel. I forget if it was ICT or if it was somebody else. And I was like, no, I don't think that it's actually very good. And I went and I did some research on them, and like when I did the research, I was like, oh no, like this person is totally full of crap. And when I said that to the guy in chat, he was extremely offended by it. And when I started digging into it, the conclusion that I came to was that it was actually that person of that channel trying to promote his channel through us, which I get a lot of. Kudos to Matt. He did not piggyback off of us like many other channels tried to do in the future space, right? It was 100% organic. It was all him. You know, he got the right thumbnails and stuff. He, you know, frankly put things in thumbnails that I'm just can't get myself to do. But it was all through the YouTube algorithm. And then the growth that he had more recently is kind of from collaborations. But what I've always said, at least with the way that the channel, he has Harry Potter level myth in trading and has like over 500 hours of pseudo trading content with the best buzzwords in the English language. Yeah, I you know, his name, because he does Forex, right? So his name always comes up in the Forex circles, and the old timers in Forex do not have a very high opinion of him, for sure. It is pretty funny, but I only looked into it enough for when one person asked about it or whatever, and it's technical analysis with absolutely zero backing empirical evidence and a lot of marketing. Yeah, well, look, I'm gonna at some point I'm gonna have to get better at it, right? I would not expect the way that the YouTube channel is right now for the YouTube channel to be incredibly popular. In fact, I'm actually surprised that the channel is as popular as it is, because there's just not that many people interested in bonds. Granted, my content hasn't been primarily about bonds. I think it's kind of interesting, or it's going to be really interesting to see how these next set of videos that I'm going to do that are more specific about the bond market are going to be, because, you know, there's not a lot of content out there. So I think I can rank really high on this, and we'll see how much interest there is in it, right? But at some point, we do want to grow the channel larger beyond that. And I think part of it is me dragging my feet because, you know, there are some things that I probably need to do better at or do differently or whatever to become a more popular channel. And I guess that involves personal growth, and, you know, that's always a hard thing to do, right? So maybe I'm putting it off. I don't know. But we do kind of want to get into more general content, right? We started with our niche. We've dominated our niche, okay? When it comes to futures trading, and especially treasuries futures trading, there's nobody else in the space that even holds a candle to us, right? And then you use that as a springboard to more general content. And I don't know exactly what it is that I got to do to get to that next level, but I need to start figuring it out. And it is probably going to involve doing a few things differently. I think one thing that I want to do is I just want to practice my scripts a little bit more. Like, sometimes it's like I write it and then I'm just reading it off the teleprompter for the first time, but really I should have read it out loud like 10 times first, sort of a thing. I think I want to do that a little bit. Get better at the delivery. Take 6 months to teach a baby about the order flow, and this will springboard you. Well, I think so. So one thing is, I made a, you know, when we had that huge pop, I made a video, you know, I made a short for that, and that did pretty well, right? I think that those sorts of things can probably grow the channel. But really, in the end, it's going to be creating good content and continuing to create content of the quality that I've had, and just making that quality content on subjects that reach a larger audience, right? So now that we're getting into treasuries, right? From there, we're going to talk about the Federal Reserve. So then I think that that's a larger audience that is interested in how the Federal Reserve works, right? So that's something that can grow the audience. And then we can talk more about general economics, and in particular, the economics at that time. And that is where then we can really start. Then we can start making some of the videos like what Graham Stephan does, right? Where we can reach a really large audience. Order flow is a popular search term because of Jigsaw. Yeah, I think you'd be surprised, Monday. So Jigsaw is really great, and order flow is really great, and they've definitely had their success. But the amount of people that are searching and following for order flow trading compared to chart trading is like it's a massive difference. It's something like 80 to 90% of retail traders in futures are not using order flow. You would think. Just remember, orders have a very significant impact on prices. So it does not take very much to arbitrage an edge away. So when we come and we look at order flow, we say, well, yeah, I can see the order flow, but there are certainly things in the order flow that are already kind of arbitraged out, right? Like I could come in and I could try and catch the edge, right? But it's hard to make money from just doing that because there's too much competition. People will beat you to it. If I can just try and do market making, but there's no way I can do that in the 10 years, there's people that are going to beat you to it. But what we don't realize is that all it takes is like one or two institutions to be in that market, and it's not available to you anymore, right? So it's the same thing as like, even though there's only 10% of traders doing that, that's still enough to reduce those statistical inefficiencies, right? So, but it is kind of an interesting thing to think about. Like Jigsaw has had a lot of success. Axia has had a lot of success. Yeah, I agree that as well. But the amount of success and viewers that they have compared to the viewers that are just charts, it's like a fifth. It's a fifth of what they get, right? In other words, if my channel was all about reading charts and price action and the S&P 500, that automatically would probably make my audience 5 times larger. Axia is so expensive. Yeah, well, I've never taken it, so I don't know if I can say that it's worth it or not. Hey, the treasuries are really starting to get a more that order flow that I want. We're getting a little bit too close to the end of my trading session for me to take a trade now. So overall, I think I made the right choice. I mean, I could be up $20, but that would have been from all sessions. So that's pretty compared to yesterday. Maybe I'm just become spoiled. Something that happens a lot where you get these really high volatile periods, and then when it comes back down, you don't like it, or you never take your profits because you've been spoiled, right? You've been spoiled. Maybe I've been spoiled, but we did not really get the order flow that I wanted to see until the end here. And even then, the pullbacks are like 6-tick pullbacks. I guess 6 ticks up, 8 ticks down is about what a treasury would normally do. They're not, the 30-year is not below overnight lows, for instance. What is the 10 years lows? Yeah, even the 10-year, we're only just, we're still a little bit away. 15 is the overnight low. So I think I did the right thing by not taking many trades today, but I don't understand how order flow matters when trading derivatives. Well, so this is an interesting question. Well, it's interesting because the answer is interesting, right? What moves markets? Orders move markets. So it is necessary in order to understand what is going on in your current market to see the order flow, right? That I can't see all of the order flow does not diminish the importance and informational content that can be derived from watching your market. Like if we're watching the S&P 500, right? I'm not seeing all of the order flow for every individual constituent stock, but the order flow that I do see in the treasury still has value. Okay. But it just comes back to the larger thing here, which is that markets are more statistically efficient than they are informationally efficient. So if you can find a piece of informational content that is not priced into the market, and you think that you have a catalyst that will prompt that to start being traded by the market in a way that allows you to predict the future orders, that's the thing that's going to be really very valuable to you in the end always. So you should still watch the order flow in a derivative markets, but ultimately there is more opportunity for us to make money from an informational inefficiency, right? That doesn't diminish the value of order flow. It just means that there is something else out there that is arguably more important. And the thing that I think is so valuable about Jigsaw and Axia and No BS Trading and even Futures Trader 71 is that they acknowledge that the informational content of prices is the markets are not necessarily informationally efficient. Well, I wouldn't even go that far. Let's just say they acknowledge that news is a significant part of trading. Right? All of these chart people say, "Oh, just ignore it. You want to know as little about what's going on in the markets as possible and just watch the patterns." It's total nonsense. It's total nonsense. And actually, all of these people, they understand that that you need to be following the news, and that a lot of and that what you're watching with the news complements what you're doing with order flow, right? At the same time, there's a lot of people that in the space, and I don't even think that it's so much the educators. I think it's just us. I think it's just the human's tendency. My gosh, that dog! I am gonna punt him. He needs to stop barking. Our natural tendency as humans is to want to try and see patterns and trade technical analysis. Like basically the entire human brain is basically geared towards doing technical analysis, right? Seeing tracks in the dirt and making predictions about where animals went based off of that. That's what humans are built for. And so our tendency, man, now they're trading. Now this is the trade that I wanted. Now at 3% in the 10-year on the run. And we're getting some good order flow short, really good auto correlation, quite dramatic change in price is just, it's too late for me to be doing it. That sucks, but that's okay. There will always be other days. Anyways, so our tendency, we're always going to be tempted to want to try and apply technical analysis to order flow and say, okay, when I see the cumulative delta work out in this particular pattern, that means X thing. The X thing is going to happen and I want to take a trade. No, it doesn't. It's you need a better premise than that. You need, how is this actually going to induce people to place orders, right? There's been a significant change in the market in the past 2 days in terms of expectations of treasuries, and they probably haven't priced it in. Probably good chance that, barring big change in the data that we get over the next week, that we go back to 3.2 in the 10-year, right? So this is not priced in yet. So yeah, we want to go short, right? But I'm not going to go short until I see some order flow supporting it, right? Is it fair to say that the order flow in the actual stock or treasury is way more significant than watching order flow in the ES? I think so. I don't know if I can prove that, but my experience and theoretically speaking, the order flow should have much more informational content in it in the treasuries than it does in the S&P 500. Yeah. I agree with that. And there has been a lot of study showing that price discovery originates in the futures in the treasury market. So it's a good downtrend. And what did we get? 2.97. So I could have made 30. Yeah, the breed that I've got, we tried to do everything to prevent him from barking, but it's like all it takes is one day to let him bark and then he's ruined. So, okay, guys, what should we put in today's title? I don't know what to put in today's title. I'm gonna probably put something really nondescript. Oil recovered $100. That's significant. Can say Boris Johnson resigns, even though we didn't talk about that at all. UK Prime Minister resigns is what I'm going to put, just because that will make it easy for us to find that day if we go back. But yeah, I kind of felt like it was a snooze fest in some way. Was really disappointing the way that it worked. I mean, like the whole time I wanted to go short is just I didn't really see the support for it until it was way too late for me to want to try and trade it, right? Because I want to work my regular day job. I enjoy my regular day job too, and I don't want to be distracted with it trying to manage a position all day. So it's better that I just lose $7 today and then come back and make more money maybe tomorrow or next week. All right, guys. I've spent too much time talking and trying to justify myself. I will see you tomorrow. Don't miss it. Non-farms. In the meantime, stay profitable, friends, or at least don't lose it all.